Hello and welcome, traders. It is Monday, April 15th, 2024, tax day for some of you. Really tax day for all of us, I guess, unless you're filing an extension, then you still got to pay, but you can wait a couple more months to actually file your taxes. So a lot of tax selling probably going on Friday and today as well. So that's helping the market. Over the weekend, everybody was up in arms over, oh my goodness, the world's going to end. It's World War III. A lot of panic I see out there. A lot of people just regurgitating junk they read on Twitter, which I don't even know if any of that stuff's even true. Although, isn't everything on the internet true? Huh? No, apparently not. So don't panic yourself and don't panic others. Don't even share info. Just ignore it. Watch what the market's doing, and we'll make our trades based on that. So overall, over the weekend, Iran shot some missiles at Israel. Slow, hours long to get there. All pretty much got shot down. And then they said they were done. And then Israel said, we're not going to do anything about it. So that whole thing is now over. So you punch me, I punch you back. And now everybody's done. All right. Then we had, more oil. Oh, is that going to spike oil? Is the U.S. going to have problems now? Are we going to, we're not going to run out of oil. The U.S. is now like one of the largest producers of oil, people. So if you're expecting the oil price to go to 120 today, that didn't happen either. In fact, oil pulled back. We're going to cover that in a little bit today as well. Oil volatility, though, spiked up a bit. Which is making it a really nice environment to place some trades. So before I jump into the markets and before I really jump into our portfolio and take a look at what's going on out there, I really want to spend a few minutes here on really controlling and maintaining a disciplined mindset. And I know I talk about this maybe a lot, maybe not enough, in my opinion, but you're going to lose money when the markets start to pull back if you don't keep a level head. And if you're really new to this whole trading game, it's going to get scary, okay? And me telling you to stay calm isn't going to help you, okay? You've got to kind of live through some of it, but you just got to take a step back, and I'll tell you a couple things I want you to think about. So I'm going to give you like 6 different takes here. Number one is prevent panic selling, right? So high stress or panic can lead to impulsive decisions, which is absolutely what we don't want to see in trading. When I talk about trading without emotion, easier said than done, okay? Experience will help you along with that. Okay, but you don't want to sell without a strategic reason. Just because you think something is happening or going to happen, don't just start selling. Okay, manage your emotions. Okay, avoid making those hasty decisions and just follow your trade plan. Okay, if your trade plan is sell at the first sign of a dip, okay, then sell the first sign of a dip. If your trade plan is to stop out at a 2x loss on something, okay, then wait for the 2x loss. Well, I get a lot of questions. Well, what if it's down 160%, but not 200? What would you do? What does my trade plan say? My trade plan says 200% or 2x loss. That's when I'm going to stop out. Okay. If you ask me what I'm going to do, I'm going to tell you, did you read it in my trade plan? Because it tells me exactly what I'm going to do. I really don't just make up arbitrary moves in there. So number one, don't panic sell. The market was only down 1.3% today, and you would have thought that the world was ending. Okay, it's down like 3% off of its highs, 3% off of its all-time highs 3 weeks ago. Okay, still not a big deal yet. Okay. Number two here, I want you to maintain perspective. So maintaining perspective, market fluctuations are normal. Okay, in fact, this market that we've been in, I'm looking at the screen here, and I'm looking at the, at the chart. It's not normal to just run straight up from October of last year until now with no meaningful pullback. Okay. So market fluctuations are normal. Pullbacks are normal. Okay. Downturns are usually often just temporary. So you got to keep a calm mindset, and it's going to help you maintain your broader perspective, allowing you to assess the situation logically rather than reactively. Okay, makes sense? Maintain your perspective on what's going on. You have to have a pullback for the market to go higher. Okay? It's been running without one, and you knew one was coming. Right? We thought maybe it would happen in January or then February and then March, and now we think it's going to happen in April. Okay. Who knows? Okay. Maybe this is the pullback, but this is beautiful. Okay. This is exactly what we want in order to create healthy two-sided action and increase premiums, which have been too low for too long for us premium sellers. Okay. Number 3, strategic decision making. So effective investing requires making decisions based on sound analysis, okay, and strategy, not emotions. Okay, emotional response is going to cloud your judgment. It's going to lead to poor investing choices. Stay composed, adhere to your investing strategy, adhere to your plan. Okay, and if you don't have a plan, well, this is the time to get one. Okay, if you just took some significant losses and you don't know why, I saw some people closing out of some trades today that was not in accordance with their plan, but their plan really wasn't sound or fundamental, and their plan didn't really work correctly. Okay? So you've got a plan that might be flawed that you're following. You'll figure that out, okay? But you got to follow your plan. So make your decisions strategically based upon what you see, not what you think out there, okay? What you see, okay? If you're seeing, the charts of the market starting to roll over, start to figure out your next strategies. What are you going to do? It's not going to change trades I'm already in. I'm going to let the probabilities play out. Number 4, risk management. Okay, this is really a critical piece for everybody out there. Emotional control is going to aid in your consistent risk management. If you're going to follow your plan, and your risk management should be your sizing of trades, number 1. And number 2, it should be your stop loss measurement. Okay, those are your 2 big risk management tools. How much buying power am I going to allocate towards trading? Maybe that's number 1. Number 2 is how much buying power am I going to allocate to each individual trade, or really, what is my max loss as a percentage of my net lick per individual trade? And then number 3 would be, what's the actual stop out? What's my exit plan there? Okay, so risk management, okay, look at your risk, understand your risk profile, and trade your plan according to that. Okay, so if you don't follow a risk management plan, you're going to have some problems. Okay, and I'm seeing that already with people that really didn't have a good defined plan. Okay. Another thing here is your psychological well-being. And continuous stress about financial losses can really take a toll on your mental state. And I want to make sure that you understand that and use your plan and just follow it. I know it's hard to say don't get emotional about losses. Some people are going to do that anyway until you've had a handful and you've been through some of these situations before. Okay. But you want to maintain your emotional equilibrium, okay, which is going to support your best health in the bottom line here. So making sure that you manage your stress by just following your plan. Okay. A loss is a loss. Okay. You're going to lose. Every company experiences losses. Okay. If you're trading as a business, okay, our goal is to minimize those losses, but we're going to take them. Okay. I've had an absurdly high win rate this year. Okay. I expect more losses to come. Okay. We had 2 months where we were just destroying the market. Okay. Then last month was okay. And this month is not so great so far. We're not losing. We still have a gain this month. Okay. But we're not where we should be or where we want to be. But that could significantly turn around here if we start to hit some traps and hit some of our profit targets on things. However, I'm not going to get too high. I'm not going to get too low. I'm just going to kind of maintain as we go through it. And we're just letting our plan work. And then the last thing here is just learning and experience. A calm, emotionless approach during stressful market conditions is certainly going to help you. Okay. It's going to be a valuable learning experience. I want you to experience losses. Okay. I think it's terrible when you only see the markets going up and you see people posting wins after wins after wins after wins. Okay. That's actually bad for you. Okay. It's bad because if you're seeing people constantly winning, okay, you're not going to handle losses well. It's also going to create a lot of FOMO. You're going to start to trade like they're trading, and then all of a sudden, bam, the market reverses and you're going to get slapped, okay, and it's going to hurt quite a bit more. Right? So I want you to make sure that you're trading, okay, according to your own risk management, and just follow a plan and stay calm, enjoy the ride, use it as a learning lesson if you have any losses. Okay. But other than that, if you follow our plan, okay, you're going to put yourself way ahead of 90% of the people out there that have no clue what they're doing. They have no plan. They're just following some furu on YouTube, okay, who's made a bunch of money recently, and then all of a sudden they're going to be out of business. Okay. A, because you don't know exactly how they're trading or what money they're using, and B, you didn't have a plan. So, yeah, and even those of you that have a rough plan, the Mike Tyson quote, everybody has a plan until they get punched in the mouth. Okay. This is where the rubber meets the road. I don't know if we're going down any further. I don't know if today was the last down day for the next year. I don't have any clue what the market's going to do tomorrow. I do know that we have a 50-50 chance of going up. Okay. And for that, I'm going to use that to my advantage here. I'm going to sell premium in a higher IV environment, which we're in now, which is going to help me take in more premium. Okay? And I'm going to put strategies in place that make sense for me based upon what I'm seeing. All right, so let's take a look at the markets and see where we are. Let me see if I can pull this up, share my screen with you guys, and let's take a look at some of these things. Let me get myself off of the screen. All right, let's take a quick look. ES today, you can see on the weekly, I know there's a lot of lines because I was doing some work today on this, but you can see this rising wedge. We broke out of it 2 weeks ago. Okay, that was the first sign of us rolling over here and a pullback beginning. That was the reason, okay, for me to start putting on BA trades and making sure my hedges are all up to date. Okay, this was the start. Okay, we're 1 day into this week, it's down, and what we did today was over here on the daily, okay, we broke down through this, I don't know if you want to call it a bull flag here as well. Okay, we broke down through the bottom of the channel. Okay, more importantly, we broke the 50-day moving average on the daily. MACD's been falling, RSI's been falling, squeeze momentum's been falling. It's in a squeeze, could fire to the downside. All the momentum on the weekly is heading lower as well. So all of these things are telling you that we're in a pullback, and maybe this thing's got some legs to it. Okay, and I threw some fib numbers on here, but just trying to figure out, where those are. I mean, you've got the 21 EMA on the weekly here, about 5,000. Okay, then you have the 38.2 fib at 48.72. You have some support here around 4,800. You've got the 50% at 47.30. You've got the 50 moving average down here. Okay. As you start to break down, I mean, there's a lot of different places that we can come to stop. Okay. I think most of these would work well for us. So if we fall down in here anywhere from today, 5,100, all the way down to about 4,600, most of those will work out well as long as we don't get there in 2 days. Okay. If it takes 10 weeks to get there, that will be beautiful. All right. So there's ES. All right. Taking a look at oil here on the session today. Oil had a pretty good down move, finished well off of its lows. It's still in this upward trending channel. So ES is bearish weekly. Okay. Oil bullish. Okay. And it's still, kind of hanging around the upper trend of this channel. Nothing to do on oil. I like where oil is. I'm still bullish, but even a pullback here would be fantastic for me. And if we look at the daily chart, okay, I think you're running out of some momentum here. Okay. The weekly chart still looks pretty decent, okay, but a pullback wouldn't be the worst thing in oil. Okay. So we'll see what happens. Gold as well. Gold looking a little interesting too, because I think gold looks a little toppy here, okay? We're up decently today, so a good update today after a big down day on Friday after hitting some new highs. So we had new highs on Friday, and then, pulling back, or, again today. So new highs, big pullback, and then bouncing off of that today. But you're overbought on the daily. MACD's rolling over. The weekly, you're very overbought, but still looks pretty strong. A little bit of crack here. as you start to, and today we triggered a bearish PSAR signal, a little bit of bearish here. I'm not saying we're in a bearish market, but we just flipped to bearish today, okay, in a bullish market. Okay, a nice pullback here would give us some nice two-sided action and might open up gold for some new trades. Okay, bonds is the biggest disappointment of the entire day. Okay, bonds falling down just to the bottom of this downtrending channel, which it's been downtrending now for several weeks here, a couple months, okay, since really the beginning of the year. Okay, breaking through that channel, but then finishing above it on the session today. So you got MACD falling, RSI falling, squeeze had fired to the downside, but you're now starting to get into almost an oversold situation on the daily, even though I think we could go down a little bit more on the weekly. I still like it here today. This move caused us to stop out on a 112 naked put today, but I put on a whole nother 112 trade based upon this. So we'll see what happens there. I've given myself some really good downside. I still think the low of last year at 107 may still hold. I'm below those strikes on most of my trades. Okay. Well, now volatility starts to spike up. Now it's a different issue. But volatility on oil definitely ran up today pretty decently. All right, and then the NASDAQ dropping 1.6%. So the worst worst area of the day today, the rising wedge breakdown 3 weeks in a row now, breaking the 50 today, like the S&P, bearish PSAR trigger today. NASDAQ looks the worst of all of them, and it's your big cap tech stocks in here. You know, Apple down 2%, Microsoft down 2%, Amazon down 1.5%. Meta down over 2%, Google down almost 2%, NVIDIA down 2.5%, Tesla down almost 5.5% on Tesla here. It was looking pretty decent, trying to break out of this descending wedge pattern. It's at the bottom of the channel. I still think this thing is not the worst setup. It's just not a great setup yet. Okay, so you just hang on. The weekly doesn't look too bad. MACD is starting to improve. The squeeze is getting long. I think this is a good opportunity, but we're heading into earnings here. And then the last thing I want to take a quick look at is let's take a look at VIX. So VIX popped up pretty good today, popping up to 19 on the session. So a pretty good VIX pop on Friday. Big spike, tailed off at the end of the day. Today, though, it resumed that uptrend. So you got VIX in an overbought situation, but a big spike on VIX, moving up 11% today. So volatility increasing, which is perfect for us premium sellers. This is really going to give us some good two-sided action. A lot of people are wondering, well, what do you do about this? Are you stopping out on this? Do I stop out early? Do I adjust my 112s or anything? You know, while everyone's worrying about that, I already have a plan for that. Okay. What I'm more interested in is what can I do to take advantage of this situation where we've got increased volatility and a market that's pulling back, that's been overbought. Okay. And we've been saying it for months. We've been overbought and we're finally breaking down. Okay. If we can get close to this 21 EMA in here, okay, I think you're starting to get that nice two-sided action. I think it's almost time for me to start putting on some strangles in ES. So I'll give it a day or two to settle down, or maybe even this week. Okay? But I'm going to be looking at getting back into strangles on ES. With the volatility up here, I think this is a great play opportunity. It's still a little bit, to me, a little bit risky at the top here. Okay, but I think this has been really nice for us. So personally, I like what I'm seeing. Okay, I'm thinking this is actually pretty good stuff overall. All right, let's take a look at our account today, and let's see what happened in the account today. So our delta on the session rising up to 1,017. Now I am over my delta threshold. Okay, that I start to watch, which is 0.2%. Because the market's been selling off, it's totally understandable. I will look to, if we continue to move higher, I mean, being 0.23 versus 0.2 is not the end of the world. Okay, so I'm not going to start dropping delta trades in here to lower my delta. However, I am going to start to look at either selling some potential calls, which I'm not wild about, or putting on some more bearish style trades in the account, right? Or taking off some bullish trades. I can do either one to reduce my delta. Now, theta with IV popping up to 0.5%, theta is a little bit outsized as well. It's still 2%, or 2x of delta, so still not bad. Okay? I don't mind where we are here on theta. After all, we are theta traders. That's what we do. Net lick dropped on the session today, mainly because you've got, mainly for me, it's bonds. Okay, today's entire drop in my net lick was due to bonds. And BP usage remained exactly the same, so my BP really didn't pop at all. Here, it's still sitting right around the upper 50s. Here. Now, I did take a loss today. So what was the loss here? This was a 112 trade that we got stopped out of the trade. It ran a little bit past what we were trying to get out at, but nonetheless, we did stop out, okay, adhering to our rules on a 112 trade. If I can either close the entire trade in the trap, or I can, at a 1x loss, 1x the max trap profit, not in the trap, or I can close the naked puts out. I chose to close the naked puts out because ZB is still in a downtrend, so I'm still looking at that downtrend to continue, which could hopefully give me some more gains back on the put debit spread. Now, the put debit spread is still in effect, and it's up over $1,000 some, so it's offsetting some of this loss already, which is exactly what we want. If bonds continues to either stay here or weaken a bit more, that put debit spread is going to continue to increase in value. Is it going to wipe out my entire loss? Probably not, but it's going to do a pretty good job for me. So I'm pretty happy with where we are. Overall, we're still sitting at $13,000 in realized gains. 13% almost, 12.65% in realized gains for the year. Our net lick is down, well, not down for the year, but it's dropped a bit lower. We're sitting at a little over 5.5%, or right around 5.5% for the year, which is low for where we want to be, but it's only net lick. It's not realized losses. They're just on paper right now, and I think we're in pretty good shape with what we have working. We haven't even begun to close any of our 112s yet, which should net us hopefully $5-6 grand this month in more realized. But also, if we start to hit some traps, okay, I think we're going to be in pretty good shape. All right, so there's where we are overall when it comes to our portfolio. So net lick dropped a bit on the session today. We had to close out a naked put trade. Not emotional about it. Okay, it wasn't a naked. It was the naked puts of a bond 112 trades. Bonds looking a little bit ugly, but ugly enough for me to want to put a new trade back on. And I'm looking at some trades in oil right now, and I'm looking at ES as well. We're approaching a new 112 trade in ES. Our buying power is in totally fine condition. Okay, and by the way, we're only down 1.29% in ES today. So a little bit down. It's great. Good stuff. Gives us some great two-sided action, giving us some extra volatility, which is really great for the trades we want to be putting on. We're sitting there with pretty decent amount of buying power. It's not too much. So if we pull anything off for a win in the next day or so, or see what the market does tomorrow, but if we can free up any buying power, we will be adding some more trades to the portfolio. All right, there's where we are today. I hope you guys stayed safe. What I want to make sure you do is listen to some of those rules I said at the beginning about your mindset. And two, this is a long game, okay? Your P&L being down is not, is one thing, okay? Your net lick being down is a total different thing, okay? For us, we're still closing, and we're not closing a bunch of losers in here. So we have the opportunity to come back and turn those paper losses right now, unrealized, potentially back into winners. We don't have a whole lot of unrealized losses. We just have some gains that we've been giving back a little bit as the market drops. So we don't have anything that's close to being stopped out at all outside of that ZB trade that we closed today. Okay. But if you see people posting a bunch of gains on a day like today, okay, they're not trading the Income Navigator way. Okay. You're not putting on 60, 90, and 120-day trades. You're not trading the 112. You're maybe not trading strangles. Okay. What you're doing is you're gambling with short-term money, either on the call side or you're buying puts or something like that, which is all fine and dandy. You can do that. We have a service for active called Active Trader. You can exactly do that in there all day. It's really about swing trades, scalping, doing all of that. Okay. Those things can really pay off. We did some zero DTE trades today. I took a win on call credit spread, took a loss on a put debit spread today. But you know what? I stopped out, got out, and kind of a nothing day there. But that's all great stuff in the Active Trader service. So if you want to check more about the Active Trader, because you really want to be shucking and jiving with your calls and your puts, and you want to play every move in the market, great, do that. If you want to create long-term wealth, join the Income Navigator service, follow what we're doing, okay? But have your trading plan, follow your plan, remove emotion, and allow you to stair-step your way up through the year. This is going to get exciting stuff if we continue to sell off and stair-step our way down. This is what our accounts are designed for, okay? We're excited for that. All right, everybody, take care. Have a great rest of your evening. We'll see you tomorrow. Bye-bye.